The federal government, the U.S. government, is the biggest purchaser of goods and services in the world. I think the number is $700 billion.
In today's inaugural episode, we're thrilled to have John Blackstock join us. John is the New Jersey District Director for the Small Business Administration, or SBA, which means he's at the forefront of helping businesses across our state thrive and overcome challenges. John has over 20 years of military service, and he's developed strong leadership skills that have served him well in various important positions, including roles at the U.S. Department of Homeland Security, the Internal Revenue Service, and Department of Commerce. Now he brings his wealth of experience to the SBA, where he oversees programs that assist over 2 million business owners and entrepreneurs in New Jersey. But today, we're going to dive into how the SBA supports small businesses, the hurdles that these businesses might face, and the array of programs available to help them prosper. John is going to share his expert insights on making the most of federal resources, the latest initiatives from SBA, and other practical advice for business owners looking to excel in a competitive market. Thanks, John, for being here today, and our biggest partner that we have, and we truly appreciate the relationship that we have. But maybe you could tell us a little bit about your role as the District Director for SBA.
Yeah, thanks for having us, Kelly. The SBDC is one of our most valuable resource partners. As the New Jersey SBA District Director, I oversee the operations for the entire state. As you know, and as many of your clients know, but for those that are watching that don't know what we do, we provide 4 pillars. The first one is access to capital. So we like to think of it as providing loans. We have a group of lenders that provide loans and get the SBA guarantee. We have 7A loans, that's our largest product, and then we have 504 loans that allow business entrepreneurs, business owners to buy real estate and equipment. We have lenders that focus in on micro lending, those loans less than $50,000. That's the first pillar. The second pillar, we provide access to federal contracting opportunities. And there are 4 vehicles where contractors can apply for our programs. The first would be the 8A program. That is primarily for minorities. The second one is a woman-owned small business, 51% owned by a woman. The third is vet certification. So if you are a service-disabled veteran that is receiving compensation and pension from the Department of VA, you're eligible. And the fourth vehicle is our hub zone, historically underutilized business zone. Think of a retired, like a military base that was shuttered. When the base is moved out, that economy is shuttered. The idea is to encourage businesses to set up camp and shop in that zone and hire 35% of their workforce to create more like an economic spark in that area.
So it's when large businesses close, or does it just have to be the bases, or could it be like a large corporation that closes as well?
It's got to be a very wide footprint.
Okay.
So I think of the base realignment committee. So for example, there are hub zones all over New Jersey. Newark, most of the areas are hub zones. Now the SBA has a map. If you go to sba.gov, G-O-V/hub zone, there's a map. And if you are interested in getting some of these opportunities to compete for federal contracts, put in your address in the hub zone map, and it'll tell you whether you're in or out of that hub zone.
Okay.
So the hub zone is good because you don't have to be a minority, you don't have to be a woman, or don't have to be a service-disabled vet. You've got to be willing to put your business in that underutilized business zone and create that economic spark. That's the second pillar. The third pillar, which you're intimately familiar with, counseling. So we have resource partners and we have strategic resource partners. I like to think of our strategic resource partners as those who receive grants from the SBA, like your network, which, by the way, is probably a model for the country. Small business development centers. I know you've got 11 across the state. You know what they do. But for those watching that don't know, you guys provide business expertise in counseling, how to get your business to the next level, classes on media, marketing, pretty much everything except legal advice. We moved to another strategic resource partner, the SCORE Mentors. They're retired executives that provide counseling and mentoring to business owners. We have 2 women's business centers, one to the northwest in Chatham, and one kind of southwest down in Camden. So 2 women's business centers. Anybody can go receive services at the Women's Business Center. And the last resource partner is the Veterans Business Outreach Center. So we have one for our region, and the SBA, our region, includes New York, New Jersey, Puerto Rico, and the U.S. Virgin Islands. So we kind of share our VBOC representative across those regions. So we provide boots to business classes to help veterans as they transition from the service to decide if going into business is for them. And then the last pillar that the SBA provides is recovery services.
Disaster.
Disaster reserve. So we work with local emergency management officials to provide loans for businesses, homeowners. So if you're in say the Passaic River flooded and your home was damaged, homeowners can apply for SBA disaster loans as well. There's a little process. We work with FEMA. So the president or the SBA administrator or the governor can declare an emergency. Once that happens, then that puts the FEMA boots on the ground and the SBA disaster team on the ground. If you have flood insurance or disaster insurance, FEMA will serve you first. If you don't, they will push you to the SBA. It's a loan. So Kelly, you have to qualify. Not everyone gets these loans. They are low interest loans. I believe they're like 3.875%. They might have gone up because interest rates have gone up, but there is a qualification process. So that's what the SBA provides. I oversee those 4 pillars. We have a staff of 9 to cover the entire state, all 21 counties. We have got folks that are aligned to do lending, access to capital. So I have 3 lender relations specialists. There are 2 business opportunity specialists that are aligned to federal contracting. We've just acquired an outstanding outreach and marketing specialist named Shai Hopkins, who you know very well. Used to be one of your employers. She's helping us do outreach. We've got a staff, administrative staff assistant, and then there's Lindsay, the deputy director. So we do a lot with not a large staff.
So I want to touch a little bit because you mentioned the different pillars that you have. So if somebody, let me hit on disaster real quick. We're coming up into potentially some timing that could be very creative with Mother Nature, with our earthquakes, with everything else, the eclipse, the earthquakes, everything. So let's make sure that the audience is fully aware. Is it a loan directly from SBA? Do you still have to go to a bank? Because most of your loans, they're not loans per se, they're guarantees. They still have to go to a bank to get the financing, and then SBA will guarantee it. What about the disaster? Talk a little bit about the disaster. Is that the same format that you guys are guaranteeing it, or is it a direct funding from SBA?
So during the pandemic, the SBA was providing economic injury disaster loans for businesses that were not disaster related.
Direct.
Yeah. And that is a federal government providing a loan to an applicant. Disaster is the same process. You are, and it could be a business owner, it could be a homeowner, it could be a renter. If you are impacted economically by any disaster, as long as it's declared by, again, the president. Think of Hurricane Sandy. That was a catastrophic event. That's a presidential declaration. If the SBA administrator is contacted by a bunch of small businesses, maybe a fire ravaged a town. It was localized to one small area, but it affected a large number of merchants. They could appeal to the administrator. The governor, I keep going back to the Passaic River. It floods all the time. Homeowners, businesses, they are constantly dealing with this. If one of those three declarations is enacted, then the SBA and FEMA, they put boots on the ground. My office, we will work with the Office of Emergency Management officials in that affected county, municipality, township, and try to find a space. Normally, it's like one of those fire training facilities, and the SBA will put up what's called a Business Recovery Center, a BRC. FEMA does, I forgot what their term is, but they do the same thing for homeowners, business owners, and they'll do the Disaster Recovery Center. That's what it is, a DRC. FEMA sets up their DRCs. You first go to FEMA. You talk to the FEMA coordinators. I don't know how many people they have boots on the ground, but it's a large number, a handful of people, maybe a dozen people. And they'll triage you. If they find out you have insurance, they'll deal with you. Hurricane Sandy, say your house, you had catastrophic damage. You had flood insurance. They will fix your house. You one-stop shopping. If you didn't have insurance, then they take you and say, go to the Business Recovery Center the SBA has. Here's the location, and we'll put those out. It's on the radio. We send out to chambers of commerce. We try to get the word out as best as we can. We don't use marketing on the television, which that's way above my pay grade. But we try to get the public aware where we are operating. In the Business Recovery Center, there are, depending on the severity of the disaster, 4 or 5 or 6 or more consultants that will sit down and help the applicants fill out a loan application. Listen, the last thing a person wants when they're in the middle of a disaster is to go through a cumbersome loan application. I've watched the process. It takes 40 minutes. The folks are signing.
To complete the application.
To complete the whole thing. Go there and do it. If you don't want to go there, you can do it online. It is a direct from the SBA to the individual.
Okay.
As the pandemic, we saw there's been a lot of folks that, they're saying, I didn't know it was a loan. You're signing loan documents. It is a federal loan, so you're on the hook for it. If you forfeit that federal loan until it's satisfied, that will follow you for the rest of your life. So long term, if you do default on it and it gets charged off, it goes to the IRS, the Treasury, and down the road, you're going to have a hard time getting a mortgage loan. You're going to have a hard time getting student loans for your kids.
I'm sure it will affect your credit.
Oh, absolutely.
Yeah.
So we make sure that folks know that this is, although it's low interest, it is the federal government providing a loan.
So I'm going to go back to one of your other pillars that you talked about, because the majority of what people come to us for is financing, right? So we'll get into certifications in a second, but the financing, the different loan products, and my understanding is you might be coming out with some new products. Did I hear the rumor mill right?
I don't know of any new loan products. Our biggest vehicle is a 7A.
Sure.
And you can get up to $5 million loan if you want to open a business. So what we do is we provide access to capital to start, grow, and sustain a business. Around 30% of the businesses are startups. And what we see now, the data shows that most of those don't last. They don't have the runway or the wherewithal to continue their business, so they shutter. Now, the data's skewed because of COVID. We saw a lot of issues that no one anticipated, with governors shutting down, stay at home, don't return to work, a lot of businesses. So the data's skewed, but prior to the pandemic, we saw about 30% of the startups didn't survive after 3 years. I will say that veterans, once they say, I'm going to be a small business owner, they really have taken that number. I think it's 93, 94% success for the vets.
Great. They stay in business after the 3 years.
Well, they're invested. They're disciplined. They know that what it takes. There's nothing small about small business. And you know from the former emerging leaders classes we've instructed, you know, the number one thing that keeps these CEOs up at night, finances.
Sure.
How am I going to pay my employees? How am I going to keep the lights on? So our products, the 7A, that's a solid lending platform. Across the United States, there's about 4,600 lenders in the network. So during the pandemic, you saw people that
And when you say lenders, you're talking about banks. Yep.
credit unions, financial institutions.
That all do
fintechs.
SBA products.
Well, if they're in our network, they agree to the SBA procedures. They know what the guarantee is. There's paperwork on the front and the back end. So not every lending institution is an SBA approved lender. You know, years ago, you had to put on your Sunday best, and you get your briefcase or your whatever you carry your notes in, and you drive down or you walk down to your local banker and you present yourself and you do the deal.
With a handshake.
With a handshake. Well, maybe sign some documents. It's so much easier now. During the pandemic, people were still applying for 7A loans, and we've seen that the interest rates are pretty. They're up there. And there's rumors that they're going to come down, but banks, local banks, it's compared to the SBA products, you can pick and choose where you want to go. For a lending institution, the risk is removed because there's a SBA guarantee that if this person who is getting this money, for whatever reason, if they default, the SBA is going to back that loan. So they're not losing the entire total amount they've invested.
So, and I think that that's a confusion for a lot of people because they just assume, oh, SBA is doing my loan. So it's a partnership. It's a partnership with a bank and then with SBA that's guaranteeing it. So it lessens the risk for that loan. So for example, a restaurant, which we love restaurants, we all want to go out and partake, but it's a riskier endeavor. So not all banks have an appetite, we'll just say, to do restaurant loans. So when you find a lender that's willing to consider it, especially in a startup side of it, the guarantee piece is very important because I think that it will make it more viable, more likely that they're going to get that done. But 7A is one piece, and then you have the 504, which we love because that's a three-part deal, right? And it's land, building, and equipment. So maybe talk a little bit about what is the percentage, what is the business owner's ownership? What do they have to put into that?
Yeah, great question. So what we see is, let's talk about supermarkets. Supermarkets, every town's got one. Some have more than one. If you talk to the owners, they're paying a lease. They're renting that space. And so what we would like to change and get that paradigm shift, stop paying that mortgage and buy it, pay for it yourself. The 504 vehicle allows them to do that so they can buy existing property, real estate. If you have farming equipment, vehicles, fleet of vehicles, whatever you need, equipment, real estate, the 504 vehicle is that the option for you. We only have a few lenders in the state that are eligible to provide 504 loans. And just like the 7A, $5 million is the max. You can have more than one SBA-backed loan at any time. You just can't exceed $5 million, and you don't want to go into default. So we're dealing with, and we'll talk about this later. We're dealing with a lot of applicants, both idle loans, the economic injury disaster loans, and the Paycheck Protection Program loans that have defaulted. So we're trying to help right that ship. Some have been referred over to the Department of Treasury, and we are doing what we can to clean this mess up. So getting back to the 504 loans, there are only a handful in the state of New Jersey that will offer these products. You have to be a certified development corporation to do that.
A CDC.
CDC.
Yep.
And so if someone reaches out to one of our employees or the SBDC or SCORE, or any of our resource partners, they should be familiar with the products and say, look, if you're interested in real estate or equipment, we recommend you talk to one of these CDCs and see if it works for you. And as you know from previous conversations that we've shared together, knowledge is power. The SBA is not the only game in town. The USDA has some of the best products for wind and solar farm.
And again, they're a guarantee as well, correct?
They are.
Yep.
And their loans stretch way up, more than our $5 million. And I work with Jan Riga, her team in New Jersey. So if someone says, hey, I'm interested in solar or a green energy product, I always refer them to, take a look at our products. But also, don't forget USDA. It's one of the best kept secrets. And they do have incredible loan products. And not a lot of people take advantage of that.
So just real quick to go back to, correct me, is it 10% the business owner has to put in for a 504? And then what is the percentage of financing that, because obviously nobody gets a loan with, you can't go get a loan with no money, right? You have to have financing to get, you have to give to get, basically.
Right.
So I know typically it could be up to 40% owner injection on a regular finance loan. What is it for a 504?
Yeah, so it's interesting because vets call us frequently. I'm a retired disabled vet, and folks will say, well, what's the guarantee? Why do I have to put money down? Why aren't you like the VA, the home loan guarantee? It's a totally different product. So the VA, they do have the zero down for the vets. Don't have to be disabled, just a veteran, honorably discharged. For 504, for any of our loans, the dance that you do with the lender is between you and the lender. They have different requirements, and based on your credit worthiness and your background and how do you pay your bills, it's anywhere from 10, it could be 20% down, the skin in the game. So if you take a look at, let's say a 7A loan, say you need a loan for $1 million, okay? And in this example, the lender says you have to put 10% down. That's $100,000. SBA is going to back that 50%. That's $600,000. That lender's on the hook for $400,000. So it makes it a little bit more palatable for that lender to say, hey, based on my conversations with Kelly, they're going to pull your credit. They're going to look at your past record. When they want to see your tax returns, they want to see that you're a risk that is worth their time. Banks are adverse to risk. So the more red flags you present them, it's easier for them to walk away. So just like your network, your SBDC network, when someone says, I'm interested in doing this, what's the first step? Well, the first step is reaching out and saying, how do I get help? There's resources on the internet, and people will take your money gladly to file an LLC for you. You can do that yourself. You don't need to pay somebody. You can pay someone to learn about marketing. You don't have to pay someone. Contact one of our resource partners, schedule some time and an appointment with one of the consultants. Learn as much as you can to make informed decisions. No one's going to tell you what lender to go to. No one in my office or the SBA will give you a list of lenders. We'll tell you this is a smorgasbord. Do your due diligence. Take a look at that lending institution that you think you like. See what their average loan size was, and see how many loans they've provided last year. If you're looking for $1 million loan and you like Bank A and their average loan is $200,000, you're wasting your time going to that bank unless you know someone. We took it off, but our website would have a list of the lenders, the loan size, and the volume. So it made it really easy for you.
Unlike the average of what the banks were doing?
Absolutely.
Okay.
Not only it showed you their average loan, the volume. So if you're dealing with a bank that's doing 1,000 loans and the average loan size is $500,000 compared to a small bank that's doing 6 loans, the average is $300,000, it's easy for that business owner or entrepreneur to say, hey, I want to, if I'm old school, putting on my best and walking in, I'm going to target these banks. Prior to the pandemic, somewhere, someone in the SBA said, got to make it easier. People need access to capital. We talk about it. We preach We shove it down people's throats. Let's practice what we preach. So they created Lender Match. That is slowly evolving. We saw during the pandemic. But in essence, the Lender Match is an online portal where, at 2 o'clock in the morning, you can't sleep. You're an entrepreneur that is considering going into business, and you say, I'm going to apply for a loan. Lender Match, it's at www.sba.gov with a /lender match, one word. It's an online application. I did it just to see the ease. It took me 7 minutes. Put your information, what's your name, what's your social, what's your address, what's your business name, what's your tax ID number, and some more information. How much money do you need? What do you need it for? Answer these
That's
questions.
assuming they're in business.
Well, you could be a startup, so you're not in business.
So you're not going to put your tax ID number, and
You're going to put your social.
Yep.
And
Okay.
hopefully you've incorporated. If you haven't, then the next step is, well, I always tell people, that vehicle is there. If you're established
Sure.
and you want to go down that route, Lender Match, 10 minutes, unless you take a break, hit submit. And I'll caveat, but once you hit submit, that application, unless it's Friday or Saturday morning at 2 a.m., it gets transmitted to all 4,600 lenders throughout the network. They're all over the states. There might be someone in Oregon or a credit union down in Florida that says, hey, Kelly wants $1 million to open this restaurant. How many restaurants are in my portfolio? This bank might say, I don't want any more restaurants. And then they don't look at it. There might be a few, and they'll respond to you normally within 48 hours, with the exception being the weekend, because most lenders,
Sure.
they're not working. So that's Lender Match. If you come to me and say, hey, I'm a startup, I don't have experience, I'm going to send you to one of our strategic resource partners and say, show me your business plan. Do you have a business plan? What's a business plan? Okay, we need to start, we're going to hold hands and do the crawl, walk, run phase. So business plan creation and formation, that's where our resource partners really, really come to plate and throw some home runs, because it takes an entrepreneur and those established business owners too. Sometimes, that business plan, they got a loan and it gets put away and they forget about it. Look, it's a living, breathing document. You have to shake it off because you've got to pivot when things happen, and if you're not willing to do that, you're going to be left standing still when your market is moving without you. Customers, what I'll say is, if you don't deliver, they'll find someone who can. And so if you want to sustain your business and grow and actually do good things for the economy and yourself, you've got to be able to move with the changing time. So that's where we use the resource partners to help with the business plan creation. When you think about talking to a lender, could be anyone. It could be, maybe it was virtual. Now we're coming out, we're endemic, we're doing more face-to-face. That first meeting with that lender, they're going to want a few things. One, your business plan, some tax returns, and they want to listen, they want to talk to you and see.
I have to laugh for just a second, because so many of the, I'm going to say the younger generation, I'm not going to label them on which one, they're like, you don't need a business plan anymore. It's like, that's so outdated. You don't need a business plan. I'm like, oh, honey, go to try to get a loan, and you're going to see the result of that.
Yeah, so the younger generation, they say, no, I've heard that story too. Yeah. And I said, look, okay, well, what's a business plan? It's your company's resume. Yeah. The banks want to see that you know what you're talking about. And the more information you can arm them with to remove some of that animosity and those red flags, it's easier for that lender to say, okay. Now what happens then? You fill out the paperwork and then the bank says, yes, you're going to get it. It goes to the SBA and the SBA looks at it normally in a few days, say everything looks good. They're looking at, deep background, making sure that there's no fraud. And I will say this, during the pandemic, there were so many business owners that were victims of fraud, and they're still dealing with it. The aftermath of someone stealing your identity and taking out loans, just the list is longer than my arm. I know that the Inspector General, they're busy. A lot of people, they will contact our office and they say, I've been a victim of fraud. tell me, well, I can't do anything. You have got to file a report with the OIG at SBA. And guess what? Once you file that, I don't get information. I get nothing. They go back to that applicant and tell them to disposition. It might be 2-3 years down the road. So there's a lot of misconceptions on what the district office in New Jersey can actually provide. But we try our best. We like to connect the dots. I believe in straight talk. If someone asks me something that I can't deliver, I tell them, this is out of my swim lane. I will refer you to where I think you can get some answers. And for the most part, that works. I think people appreciate and respect that honest, open, direct communication rather than making something up. And
Sure.
I will say that pretty much everyone in our office, they've adopted that, and we work well together.
So I know that SBA is out there. Everybody knows SBA. Let's be honest, SBDC does not roll off your tongue, right? So everybody thinks it's like, oh, you're SBA, you're SBA.
We need to change that. We need to change it. SBDC should be the first thing. In fact, a couple months ago, I was watching something on TV, and I saw this lady had an ice cream shop, and I thought, that's the SBA logo. We are finally getting SBA exposure nationally. Everywhere I go, I always bring up the network, SBDC. And I was I'm not saying which resource partner, and this person was shocked that I would do that because I was at one of his events, and I said, I do it for all.
Well, here you are on my show, and you're bringing up score. No, it's all good. It's all good. No, but the misnomer is, or not the misnomer, but SBA's name is out there, so you have the recognition. So you're going to be contacted first. Mm-hmm. That's the reality of it. So as people are contacting you, then you're getting them to the right resource partner, whatever's going to fit their need. What is the biggest challenges? Because you're going to hear people, and I'm sure you heard it just like we heard it, just like all of our other partners heard the stories, right, of what everybody was going through and how they're desperate in need of this to stay afloat or to stay in business or even to start, whatever it may be. What are the biggest challenges that you're seeing now? I want to try to sidestep the pandemic because we're past it, right? So this isn't, people still feeling the pain, don't get me wrong, but we have to focus on the future, not the past. So what are the biggest challenges that you're seeing now for businesses coming in? Because they're going to call you first.
Yeah, they do.
And we know it's financing and stuff, but what are some of the pain points that people are voicing that you're hearing from the New Jersey businesses?
No, there's quite a few pain points. One is the high interest rate. This is not a really good time to get a loan for a business or much less a startup. We don't set interest rates. The Federal Reserve does. So right now, interest rates, depending on the credit, 9.5 to 11% for a basic variety loan. We are out of the pandemic, but the pandemic has not let go of us. There are literally thousands of business owners that are in extremis, and they call our office. I mean, we have become crisis counselors, and my staff, my coworkers, they have weathered so much during the pandemic. And we mostly were working from home, and our phones and our computers, throughout the night would, keep us busy. A lot of folks defaulted for whatever reason, and we are spending a lot of time, and I agree with you, I can't wait to put the pandemic behind us, but we're not there yet. We have small businesses that took out Paycheck Protection Program loans from whoever would provide them a loan. You remember the PPP?
Oh, I do.
So when it first rolled out, you had multiple banks only taking loans, large size, and then we saw that the smallest of the small business owners, they were overlooked. So then the second and third iteration of Paycheck Protection Program came out and said, let's focus on the smallest of the small. And a lot of them said, oh, well, if I put 60% of this proceeds of this PPP loan, it's forgiven. Well, they did not apply for a loan forgiveness, or the lender wouldn't accept applications, or two, there's no contact.
Wouldn't accept the application for forgiveness?
Right, yes.
So they had the authority to do that. They could deny them.
No, they were supposed to process those loans, and many didn't even offer them, and then when contacted, they would not return calls. So we started this process. We are calling, and this is so weird for me to say this because we would always tell people during the pandemic, the federal government doesn't call you. That's a fraudster. We're going to send you a letter. And now we're saying, well, wait, hold on, time out. You want us to call? Yes, we want you to call now because the deadline is April 19th. Say you got a PPP loan, Kelly.
This April?
Yes, next week.
Oh.
Yes, 9 days away. 9 days away. But we've been trying to get this word out. We're making calls frantically. You got that loan, that PPP loan. You thought, and we'll make several cases. You thought 60%, it automatically is forgiven. You have to apply for it. That's the first person. The second person will say, your sister, she got the same loan. She goes to this bank and she says, hey, I got my PPP from you. Thank you. I'm ready to fill out my application. Crickets, nothing. And then
is it because of it's they don't want to deal with the paperwork?
I don't know. I just know that the small business owner is about to get kibosh because on the 19th, they're going to take these and they're going to be sent to the Department of Treasury. And you don't want to be on that do not pay list. They're going to be charged off. It's like a bankruptcy.
They're basically being sent to collections.
It is.
Yeah.
So what we're doing is the SBA has opened up a PPP direct forgiveness portal. So you have to get online and get a My SBA login, put in your loan number, your social, and it'll tell you exactly what loan you have. There's an online application. At first, it was $150,000 or less, the lowest of the low. And they said, look, this list is too long. There's no limit. There's so many people that are caught up with these lenders, and I'm not saying any names, that refuse to take applications for forgiveness. We're going to help them as much as we can, as long as they can prove that they took those 60% of the proceeds and used it for eligible payroll expenses. That's not a decision anyone on my team makes. It's going to be someone in the Paycheck Protection Program. They'll make that decision. Contrary to that, the economic injury disaster loan, the direct loan that SBA provided, same thing. A lot of people were victims of fraud. A lot of folks, they were unable to make payments. So we created this hardship accommodation program. And if you did get charged off, and if you were, and you said, I can't pay this, I'm out of business. You go to Treasury, you have a hardship accommodation program application you could fill out, and it removes it out of Treasury, goes back into service in the SBA, and you can start making minimal payments. So it's not as painful as going to the Treasury and getting on the bad person list forever.
Sure.
This gives you an opportunity because the consequences of being charged off and not satisfying that loan, it's going to follow you for the rest of your life.
And loans are just one piece to it. I mean, when we were working with business back in the day, break even 3 to 5 years. Mm-hmm. There's a percentage, 85 of businesses fail in the first 5 years, and then it's like, it transitions down. We're seeing a little bit of a different shift because there's so many resources that are out there now. And we like to tout that if you come to the SBDC or any of the other resource partners, I don't know if they track it, but with the SBDC, you're 93% more likely to be successful as if you didn't get the assistance.
Yeah, no, arming entrepreneurs with information is the best resource we can give them because they're able to make prudent business decisions based on data and experiences that they've gained and gleaned from people that have been there and done that. Vice listening to someone that they just paid money to do all this work for them. I think the education piece of it, and that's another thing. You ask, what are some of the pain points? People want things now, now, now. If you're trying to get a loan and you're caught up with this other loan, and I get calls frantically, I'm supposed to close Friday. Well, you might want to make some other arrangements because no lender is going to provide you another loan when you haven't hemmed this last one up. But I see that most people want things now, and they want it. But I go back to the vets. I mean, they take the time. A lot of people do. They take the time, and they spend time to educate themselves to know how to make a prudent business decision. The resources are out there, someone was asking me, well, how can you do more with less? We try to focus on business owners, entrepreneurs, and especially in the underserved communities. Every month there's some sort of heritage celebration where we try to go out and do events with these different ethnic groups. Last year we did a couple, and the turnout was so low that it's like, wow, the amount of time that it takes to put the resources and get all these partners together, and then a few people show up. It's amazing. We'll continue trying to do that.
Sure, you don't stop. But I wanted, one of your pillars you talked about was, you talked about your AD program, and we talked about emerging leaders and the importance of that. And I think that for the audience, it's really important for people to understand there are programs out there that can kind of, catapult them into a different arena. And I do believe that emerging leaders and the 8A program could be that. And that will lead into certifications and some of the procurement stuff. But let's talk real quick about the emerging leaders, because I believe you have something coming up, right? That might be planned?
We do. We have Thrive. It's Emerging Leaders Reimagined. The applications, we still have a few weeks. If you go to SBAthrive.com website, you can apply. It's an MBA equivalent curriculum. There's 16 sessions. They're virtual and they're going to be in person. It provides an instructor to help a business owner that, for whatever reason, needs or cannot get to the next level. Some obstacle is in this business owner's way. So we have a cohort of other CEOs from businesses. They share examples. There's 8 learning modules where we will go over entrepreneurship, marketing, things that keep CEOs up at night. And then there's CEO mentoring sessions where they give them a problem, they say, work through this.
Bringing people from actual industry to
Absolutely.
Do the instruction.
You have industry experts. We have legal CPA experts that come in and say, if you haven't thought about this, think about this. It's not, you don't walk out with an MBA. It's an MBA equivalent. It's at zero cost. So the applications, we only have a few more weeks, and we're going to review everyone. So you have to be in business for at least 3 years. You have to be for profit, your profits have got to be $250,000, which that's not a lot. So, but we lower that from $400,000 to give some of the small businesses an opportunity to learn. And what I can say about the emerging leaders, because you hosted it at your office on the main floor at Rutgers, the alumni, they're so engaged. They keep coming back, and it's a big family. And Carla Falone was the instructor. She's with Matt Wells, I believe, at Fairleigh Dickinson. She would host these students at her. I say students; these are business owners,
adult
CEOs.
learners too,
Yeah.
right? Yeah.
At her house, and they would have dinner. I mean, the family, the connective, it doesn't go away when the class is over. So it's amazing. And during the pandemic, we kind of paused emerging leaders, and then they created Thrive. They got a new contractor, and the rollout, it wasn't appealing. Now it is appealing, and now we've heard from business owners that say, I really want to see this again. We've got applications, people in Delaware, people in Connecticut that want to participate. And not every district office is hosting a cohort. So we're going to have applications. Again, I believe it's the 28th is the deadline. Classes start in June, and it
We'll
goes.
make sure we put it on our website too, in our newsletter, the information that's out there. But what is the expectation? Why is it important for someone? I get the education of equivalent of an MBA, but what are some concrete things that people can walk away with? What is the value of taking this program?
Yeah, I mean, there's multiple value points, I guess, but I think what I hear from most of the CEOs is how to improve my profitability, and not only that, but sustain it and have a growth plan that I use the growth plan, every month is what they say, and I'm projecting in my upward mobility is, the sky's the limit. So that is, I think, one of the keys. A lot of these business owners, they're at the top of the pinnacle, and there's no one to talk to and say, hey, I have a problem. Now, in this program, you've got 20 other folks in it with you. This is an opportunity to take this person out of their business. So they're not working in their business, they're working on the business. So you've got to have time, you've got to trust someone who can keep the lights on and the operations running while you're focusing on this. It is a commitment. And, emerging leaders, the old one, we used to say, this is not easy. You have to really work at this. I've seen people break down, just collapse mentally, But then when they figure it out, when their support group kicks in, they walk out of there saying, wow, this is the best thing I've ever seen, ever heard. Thank you, keep it going.
Well, and there's a value with, again, when you're at the top like that, it's lonely, right? They don't say it's lonely at the top, but it really is, because you don't have people that could understand the same, and I keep saying this, pain points that you're going through as a CEO or president or whatever your title may be. But it's nice to know that other people are in similar situations, and it's just nice to be able to talk to them. Now, I want to shift a little bit so you have emerging leaders, Thrive, 8A. So talk a little bit about the benefits of somebody doing the 8A program.
Yeah, or 8A, or the women-owned, the WASB, or the Vet Cert, or the Hub Zone. The federal government, the U.S. government, is the biggest purchaser of goods and services in the world. I think the number is $700 billion. And so big businesses would say, look, well, I have Xerox paper. I'll show you cases of this, Mr. Government. Or I have, whatever, like the desk, the furniture that we sit on in offices. All federal buildings have things in there. And those things that we bought were procured by a contracting officer that dealt with someone selling it to them. Years ago, Congress said, well, we need to level the playing field. All these big Fortune 500 companies can't keep, making profit. Let's give the small businesses an opportunity. So they created federal contracting. 8A program was the first. You have to be a minority. What's the definition of a minority? Well, it's a minority, and you have to be a U.S. citizen. And there are some categories. If you were economically disadvantaged and you're a different religious group or ethnic group, you can prove that you were disadvantaged. There's a process, and again, not my office. There's a program office that reviews these applications. But if you are approved for the 8A program, the set-asides from that federal government, they carve out pieces of that federal budget, saying, of that $700 billion, we want a certain percentage to go to 8A. We want a certain percentage to go to women-owned, to disabled vets, and to hub zones. So the 8A, I think it's 11%. I think it's going up to 17% of the federal budget. The women is 5%. The vets were 3%, but there's legislation to go to 5%. Hub zones 3%. So look at hub zones. What is 3% of $700 billion? Do the math. 210. A lot of money.
A lot of money.
It's a lot of money. So it levels the playing field. Every district office across the United States, we have 68. There's a district director that has 8A firms and WASB firms and Vet Cert and Hub Zone firms in his or her portfolio. We've got about 90 in the state that deal with federal contracting. So your folks, consultants, they do federal contracting. We work with the Apex Accelerators, with Haley Park and her team at NJIT to help educate those that are interested in federal contracting. Contracting opportunities, there's state opportunities, local municipalities. They need someone to clear the roads with snow and, fix the roads.
Does that happen in New Jersey?
Yeah.
I don't think they fix the roads.
But federal contracting opportunities, there's everything from the HVAC units in facilities to landscaping to, you name it, Department of VA, all federal agencies buy goods and services. So the sky really is the limit. And then if whatever you're trying to sell to the government, you have to figure out what your code is, the North American Industry Classification System. It's a NICS code. Say you're paving roads, there's a special NICS for blacktop paving. There's a special NICS for concrete paving. There's another NICS for concrete with rebar for, say, airports. So if you don't know what you're going to sell, we say, okay, work with our resource partners or Apex Accelerators and figure it out. Because contracting at our level, and I like to think the federal government's like the major leagues, you don't get a lot of room to make errors. You mess up once, you're done.
And does that, shifting it back to New Jersey District, your office, do you procure products?
No.
You contract, or the uppers in DC do all that on your behalf?
It's a self-serving program. So say you're a you do pavement construction, your business, and you say, hey, I'm a women-owned business. I want to join. Okay, here's the application. Fill it out. You fill out that application, submit it. The WASB, Women-Owned Small Business Team, that's Alicia Sherd and her small team in DC. They review. Oh, Kelly, yep, she's a woman, 51% ownership, U.S. citizen. She looks good. Okay, here, you are now part of the program. You have to know who your target is. You're paving. Are you paving for, who's going to hire you? Well, Department of Transportation, probably, right? So you say, hey, DOT, what jobs do you have? They forecast their jobs. Guess what? Your brother-in-law knows how to do concrete with rebar. Oh, there's an airport project. Well, FAA. Who does pavement? It's knowing who your audience is. And a lot of folks think, well, I'm in the program. I'm waiting for the contracts to fall out of the sky. The 8A program is 9 years. You have 9 years to
be in the program.
The first 5 years, we hope that you're learning and you're taking classes and you might get a few contracts, but towards the end of it, you're really expanding. We had one of our contractors that came out to Cherry Hill. In fact, it was 2017. We were doing an 8A. Let's talk to some folks who might be interested. And she was a nurse by trade. Kids were out of college. She said, I want to go back and do janitorial. She became a WASB, woman-owned small business, in 8A, and she was talking to the folks, and she said, well, I do janitorial. I have 5 contracts. And they heard 5 contracts, and you could hear the whoosh, the air escape. And she heard it too. She didn't miss it. She said, but let me tell you, each of those contracts is multi-million dollars. So you're not talking about one contract, vacuuming,
right,
one house. You're talking about getting a U.S. courthouse doing multi-levels of janitorial services every day. That's a multi-year, multi-million dollar contract. Very competitive, but the competition is narrowed down because you have a government set aside. And I want to say that I want to get more women-owned small businesses in the program. The 8A, it's doing good. Vets are really coming now. They're coming online. The VA did run their program, but the SBA took it over 2 years ago. Hub Zone is not utilized because hub zones are not in really good areas. They're economically depressed, which means crime is normally higher. Police activity, there's not a lot of police. So how comfortable are you? But we want to change
because you
that.
have to be located in
You got to be in
yeah.
that hub zone.
Which is interesting, and I just want to, what is the difference between a hub zone and the opportunity zone?
So opportunity zones, that's changed. Every administration, local, governors would stamp it and call it something, but opportunity zones, I think it was Senator Booker, what I remember when he started that, saying, we want to encourage industry to come in here. And they were giving them tax credits.
Yep.
And pandemic hit and pretty much gone by the wayside. So I know.
So rely on hub zone versus the.
Well, hub zone is completely different. Hub zone is individual. You go back to your paving
Okay.
company. Kelly, here's a hub zone map. I'm going to go to Fort Monmouth, old Fort Monmouth in Eatontown, New Jersey, in central Jersey, and I'm going to put routes down for my company. If you weren't a women-owned or 8A, and
Sure.
you say, look, I'm going to start my company in this hub zone, and you get 3%, and you can contract with the Department of Transportation, whoever is going to buy your services. So it's a win-win. What I see is some of the folks that set up in the hub zone, as soon as they start making money, they pull up 10 stakes and they leave.
So they lose
They're
that
out
designation.
of the hub zone opportunity. It's like, well, they can only take it so long. There's a couple that are really good. And I know down in Eatontown, where old Fort Monmouth is, well, Netflix is, putting up theaters. So will that change? It's tied to the census. So every 10 years, it might change. But there's areas, I know a construction, they do rock and gravel. He's got a nice facility, and I drive by it and I see, there's serpentine wire and there's security. But it's not bad. There are some that are worse. So if someone's interested, I would refer them to the hub zone map, put in an address, drive by. If you're interested, let's talk.
See if it works. But I want to bring it back and just talk about the importance of, no matter what you're doing, it's being designated as getting your a women-owned, minority-owned, service-disabled vet or veteran, SDVOB or VOB. And now in New Jersey, LGBTQ, new designation, just law that was passed. These are all important to have those certifications to be eligible for some of these programs, correct?
Without it, you are not invited to the party.
Okay, so that is really key. And for our audience, we do the certification training. We have labs that we do across the state, which is very important. But I want to make sure that we're just clear for our audience of step by step, start your business, grow your business, get your certifications, then look. Because we talk to people all the time. I'm like, do government contracting, you have to have a stable business because there could be 90 to 120 days that you might not get paid. So, and they're good for their money, right?
Yeah.
In theory.
You'll get paid eventually. but
Eventually,
right.
right. So to make sure that we want to set people up for success, and as you do, as partners working with the businesses throughout New Jersey, we want to make sure that we're giving everybody the best information as possible to help them to be successful. So a good foundation, slow and steady wins the race, right? So make sure that we're setting everybody up. But certifications are key. And you mentioned earlier about federal, state, local municipalities. It's very important for them as well, and you see this as well, correct me, that local communities want to see women-owned business or minority-owned business or whatever it may be to be able to do business so that they can say, we are working with these underserved communities.
So when people call and they say, I have this issue, you can tell, I can tell, and the two business opportunity specialists can tell, has this person spent any amount of time researching what they're going for? The SBA, we have on the website, it's www.certifiedsba.gov. Go there, and it says, are you interested in being an 8A? If you're a minority, here's a checklist. This is eligibility. If you're a woman-owned small business, 51% ownership, you and your husband, you and your spouse, or you and your brother. If you're 50-50 and he's not a disabled vet, you're not invited to the table. You have to make a decision and say you're 51% ownership or better. There's a checklist. This is what you have to do. If you're a veteran, here's a checklist. If you're a hub zone, here's the requirements. You got to be for-profit, U.S. citizen. If you're not a U.S. citizen, it's a non-starter.
Well, John, I want to just thank you for today and our inaugural interviewee that we've had on the show. So thank you so much. And I think this information is going to go a long way for the businesses. And stay tuned. And let's just one more time, what is your website to go to?
www.sba Sierra Bravo Alpha.gov. And if you're looking for New Jersey, /NJ for New Jersey. If you're in another state, / whatever the state abbreviation is, it'll take you to the district office.
Let's set the stage here. Everybody should stay in New Jersey because it's the best programs and services that we have to offer.
The Garden State is booming with business, and we want to assist as many business owners and entrepreneurs as possible. Thank you for having me. Thank you for the relationships we have. We've made great headways, SBDC, SBA network, and I think 2024 is offering more opportunity for us and business owners.
Great. Thank you, John.
All right.
Appreciate it. And thank you all for watching today's episodes. Please visit us at njsbdc.com, njsbdc.com, for more information on our no-cost business consulting, no-cost and low-cost training programs, and all of the events that we put on for all types of businesses. Remember, you have to like us and subscribe to us, and stay tuned for more empowering insights and stories. And we have just a ton of advice for small businesses, and we will be bringing more experts from the community to serve the community. So thank you so much.